Hello, fellow traders. 'Tis I, the Rumpled One. It is Monday, July the 2nd, the year 2018. Let's talk trading, rat frequency distribution. That's what I'm going to get to towards the end of the video. But let's just go through the other charts and then we'll see how much time we have. Should have enough time to go through it pretty thoroughly. And of course, we're going to always emphasize money and risk management. The trading month just starting, so let's start it out right. Okay, you can see here the yen is in that wick zone, and it looks like it might want to get out. It's 12 pips below the high, 12 pips below last month's close, and so we're somewhere stuck right in the middle of that wick zone. Wait and see what happens. On the weekly, we popped out. We're right back in that wick zone, and maybe there might be some downward movement or upward movement. We don't know yet. And you can see here the weekly wick and the monthly wick are pretty much one and the same. Daily, a little different story. We popped out of the wick for about a 12 pip profit. We're right back in that wick zone again. And we've got a handful of pairs here, over 100 pip range, and 4 out of the 5 happen to be pound pairs. Oh, one other thing. Let's see. All the gaps filled. So once again, that simple trade weekly gap fill was profitable. And for those of you just tuning in, see we had an open here, but last week's close was here. There was a gap of about 14 pips on the yen, and so if you would have bought and faded the gap, in other words, you at the open, you enter and trade in a direction towards the previous week's close. In this case, since open was below, the fade would have been to the long side. You would have bought and you could have profited. Simple. We do this every week. You can go back and look at all the weekly videos, or maybe you look at the weekly wrap-up videos and you'll see more times than not the word fill is pretty much filling the column. So back here on the daily, once again, we're still in that wick zone. The buy zone. Here we had the pivot, the open, and we had the gap. So everything was saying, let's just jump in that trade. Even if you waited here, there wasn't much of a pivot, but you can see the potential. It paid off. Rat zone, we've got 50 pips, only about 10 pips between the two trigger lines, I shouldn't really call them trigger lines. It's probably more appropriate to call them last call lines. It's like the ship is leaving line. You better get on the boat, because if you wait till after here, then you miss the boat. And for those of you just tuning in, that's what the frequency distribution is going to explain, how we got this 20 pip range from above the daily low and below the daily high right here. So this is 20 pips. Even though the range is only 50, these numbers don't change unless over the long haul the frequency distribution changes. And let's see, I usually have this on H4, and here we go. You can see here, once again, we took out the pivot. The weekly R1 is there. Looks like we might be headed back down to the pivot, and the weekly pivot's here, 0.33. Look for that to hit sometime this week. Not predicting, just saying that's what the stats say, not a prediction. Once again, we took out the pivot. You can see here, very few missed pivots. And this was a hand grenade pivot, only missed by, I think, 3 points. Looks like we've got a missed pivot on the euro yen there. And on dollar Canadian. Something we might want to take a quick look at. There's that one. And the euro yen. Oh, that looks like a hand grenade. No, missed it by about 4. So it's not a hand grenade. Here we only, usually if it's 1, it's probably, since these get rounded up, there's probably points. But over the course of the year, you can see very few missed pivots. Price action, beating the dead horse, right? Okay, we had a 3 ball here, red at the line, 1 ball green at the line, 1 ball red at the line. I don't know what else to say about this that I haven't said before. It's just such simple price action. Nothing fancy, just horizontal lines spaced every 10 pips. The 3 balls just basically telling you, okay, you can take the trade, go in the opposite direction, reversal trade. And remember, for those of you just tuning in, when you see these balls appear, or semaphores on the 3-level ZZ semaphore indicator here, and I've modified it extensively. It does a lot more than what I'm showing, but this is a breakout indicator. So when you see that 3 ball appear, you do not go the opposite way. You wait, you let that candle close. Then, if price comes to the line, that's when you take the reversal trade. But most people say, oh, it repaints. No, it's a real-time indicator. That's what it does. So yeah, you might see a 3 ball here during the day. Or actually, maybe the 3 ball was here during the day. Then this one made a little bit higher. And so then it moved. It didn't repaint. And most people do not understand that. Okay, 5 lines from the previous daily session: high, close, mid, open, low. Once again, H1 at the line. I mean, I could probably get rid of most of these charts, right? And just put up this chart and this chart and just say H1 at the line, trade with the candle color. I mean, it could be that simple. That's how simple trading can be. Wick zone. Once again, price doesn't like staying in the wick zone. In and out and back in and back out and back in, and probably we will be out sometime later in the day. Okay, here we go. The holo setup. Let's see what we have. We've only had 1 real holo trade right here. Put in a highest open, reversed off that high, came down, didn't quite get to the lowest open. Since I've turned the computer on and brought up this profile, you can see here the ask got below the highest bid. Bid went below the lowest ask, but then we continued in a downward fashion. Inventory reduction bars. Green at a green line or red at a red line. Once again, proves profitable for nice little scalps. And the guy, I forget the guy's name now, but who made this, I guess he won a couple trading championships, and that's why I was interested in seeing it. I think somebody sent me the link or came in an email or some advertisement or something, but I looked it up and I just decided that it looked pretty good. No, I haven't done a frequency distribution on this one yet. I like to observe it for a while, and it just seems to work. So trust what you see. Daily, weekly, monthly, open, high, low. Once again, monthly, weekly, and the daily, since it's the beginning of the month, are just going to overlap on the current. The Einstein, here we have, when I open the profile, price is moving down. Everything's relative to when I opened, not when the market opened, but to when I opened. So you can see I'm trading relative to this level. Okay, now for the main topic, frequency distribution, maybe frequency distribution 201. Okay, this is the, I should probably show you a few things here first. Frequency distribution, display, user input, lots of inputs. I chose, I want to do high minus close. You can see you can do a lot of things here. I'll get back to this in a second. Got the rat dots here, 20 pips off the high, 20 pips off the low. This is high minus close. This number is close minus low. So, frequency distribution. What this is a cumulative frequency distribution. So, how many times was high minus close greater than 50 over the last 100 bars? 26 times, or 26%, right? How many times was it greater or equal to 45? 29 or 29%. Since it's 100, these numbers are going to match. But you see how this number is growing. It's accumulating. So you see here, you get down to 20. How many times was high minus close greater than 20? 60 times over the last 100 bars. Okay, that's all the daily bars. Now, you can see here we had a maximum of 102.9, a minimum of 1, a mean average 33, the midpoint is 24, and the mode, the most number of times we had 16 pips. High minus close was equal to 16 pips. So those are the statistics here. Now, how does that help you? Well, you know, if high minus close here is less than 20, and you know you have in other words, price is in that rat zone, you've got a good chance by the end of the day, the price is going to be, the high minus close is going to be greater than 20. Price will close outside of the rat zone. That's how it works. That's what we're looking for. But with this indicator, you can take it one step further, because you can say, well, let me use the daily filter. And is the day green? Yes, the day is green. So what's the frequency distribution on green days? Okay, out of the last 100 bars, we used 50, greater than 20, 31 times, or 62%. So, once again, that reversal should pay off based on statistics 6 out of 10 times, meaning it'll get outside that rat zone. But as I showed you earlier on, let's see, where is it? On the rat zone. You see, remember, rat reversal. Green bar closes, or green candle closes, red candle closes, short at the low. You took some heat. Once again, green candle closes, red candle closes, short at the line. You may have taken some heat, but it paid off. And once again here, right there at the line, it paid off. So now we're in the green rat zone. We can look to go long. So that's how that frequency distribution works. Simple. So if you have any questions, feel free to ask. And just one last time, these indicators, the one that's plotting these numbers, I put it into a test indicator because I already had the wick numbers, but I needed high minus close and close minus low to appear for this video. So, fellow traders, remember, it's not what you trade, it's how you trade it. Let's all go and drain the banks.